Hey, so today's episode is sponsored by Supreme Lending. More on them later. So, I'm Milton Ali.
And I'm Hampton Scurlock.
And we want to welcome you to the Investor Tribe podcast. We have here with us a distinguished and amazing guest, as we always have here. We have amazing guests here at the Investor Tribe podcast. So we want to invite, and we are so grateful that we have my brother Garry with us here with Supreme Lending. Welcome to the Investor Tribe podcast.
Thank you for having me, guys.
Yes, that's absolutely amazing. So you've been in the lending game for a while now. What drew you to the mortgage industry?
Well, that's a funny story. I graduated college in 2000, and prior to graduating college, since 1998, so for a couple of years, I was an intern at a bank, which basically just meant they had me counting money and doing all the stuff they didn't want to do so that I could have something on my resume when I graduated college. So after that, I went to work for a bank for 3 years, from 2000 to 2003, and I was a branch manager. And as I became a branch manager, I was really good friends with a lot of people at a company called Century Mortgage Company.
Oh, yeah.
It is no more. Great company. And then I started banking them, and I started, quite honestly, seeing some of their deposits. So I called them, like, what's going on here? You guys, what the heck is going on? And they were like, well, this is not normal. You're banking the best of us, right? And, people in this business, as you guys know, being business owners and self-employed people, there's more people failing than there are succeeding, right? So I was fortunate enough to be banking the guys that were succeeding and doing well, and I became interested, right? So I already liked banking and finance, and then I got interested in what they did, and eventually just gravitated over towards, in 2003, I left the bank and went to Century Mortgage Company. And really enjoyed always the lending part of being a banker. So just to specify in lending, 2003, my mortgage career started as just a mortgage lender. So
that's 20 plus years is a long time.
So a long time.
That is incredible.
And you do, I don't know, you work with a lot of investors, but you also do owner occupant loans. You can broker loans. Is there anything you specialize in or really enjoy doing to help people out?
Well, the gamut, just to give the gamut of it, is owner occupied, as you said, investor loans, rental houses, second homes, that's your beach house, your lake house, your vacation home, and single family all the way up to about an 8-plex. Okay. Over a 4-plex gets a little tricky, but we can do it. So just lots of different stuff. And you asked if there's something I like doing the most. I love all of it. The most enjoyable is the first-time home buyer. The process is the same for all of them, but getting somebody in their first home is special.
As a real estate agent, they tend to be the most grateful.
Yeah.
And so we are an investor tribe. So our tribe needs to be a little bit more grateful, especially for the Investor Tribe podcast and for every deal that we work out for them. But what's one moment or success story that sticks out to you from an investor standpoint?
An investor standpoint. There's so many, because I've been a longtime member of CREA, and I am an investor. I've been an investor for 20 years as well. So I relate well to investors, and we speak the same language. And I know what everybody's looking for. I can't always give them what they're looking for, but I enjoy being able to handle financing for investors, and if I can't do it, to be the guy that knows the banker or whatever that can do it. So I like connecting people. So I guess without naming names, because you need your permission for that, but I've enjoyed helping people build their real estate portfolio, right? Get them from zero to the 10, 30-year fixed Fannie Mae loans, and then helping them parlay that to referring them to a good banker for a lot of portfolio loans, and helping them with my personal experience on how best to structure that and things to watch out for. So I can do that as an investor and a lender, right? And then now, with the last couple of years, the DSCR loan coming out, once we get past those 10 10 Fannie Mae loans, I can still help them. So I can help people a little further than that. So, you asked me for a specific, but in general, it's just so many stories of guys that I know that are in their 30s and 40s and 50s that I was with them from the beginning of their journey. That's fun.
I love that. So I had a guy that I've been working with for years now, and to see him walk away with a $98,000 check at the closing table from a flip that we had put together, and it was a burnout, and he reset the comps for the area. It was an amazing, I did open houses there. Dozens of people would see it, look at it, and they were like, will we ever get this much money for this house? End up, they got the money for the house. He reset the entire comp for that area. And it was amazing for him to walk away with that kind of money. That's life changing, and when you think about that, do you have any, stories of where, because you're at the beginning of that? Does that make sense? It's almost like you're at the beginning of that. Yeah. You're the reason why they're stepping into that.
The money man, making it happen.
The money man, right? So we all like you. Right? So we're all, unless you can't. Right. So do you have any stories to that of setting people up on their journey?
Yeah, I mean, it's a similar story with a lot of people. I mean, just from meeting them in CREA or investor groups, or you guys referring them to me and saying, this guy's just starting and he doesn't know what to do. I just got a referral a few days ago from a friend of mine. I'll name him because he won't care. Cliff Hayden.
That's great.
And a guy came to him, and he's got, and I won't name this guy because that's private, his lending, but he's got 4 houses right now, but he kind of is at that point where he got excited, he bought 4 houses, and he doesn't know what to do, right? And so we sat down and really looked at all of the properties, what the value is, right? What he owes, what kind of financing he has. And another important thing that you need to know is your vesting. How long have you owned it, right? So 2 of the 4 of those properties, we're going to start him probably this week. He's vested enough and he has enough equity that we're going to do a 30-year fixed rate, cash out refinance, 75% of the value. And between the 2, we're going to pull him about $100,000 out.
Wow.
Now, what I told him and what I tell all newer investors is, if you're going to take this money and you're going to go to Vegas and put it on black and have a good time, don't do this, right? If you're going to take this money and you're going to invest it in more properties, you have 30-year fixed, safe, secure money, and you have a solid budget that you've got right here, right? So depending on the purchase price, this guy now has a down payment for 2 to 4 more properties on 30-year fixed money, right? Yeah. And he's got 2 more properties that beginning of next year, because this is a long-term thing. I've been in this forever, so I'm not trying to, make a buck on somebody as much as I can right now. We all want to earn a living, but moreover, I'm making a plan for this guy. And by the time he uses that money to buy more properties, his next 2 will be seasoned early next year. We'll do the same thing. We'll keep him going, right? And so that's just the beginning of the plan, because, unless you get over the other side of the rainbow and magically find a pot of gold, you got to find money to do these things. And that's kind of where he was. Has his primary, and he was 4 houses deep on rentals, and he was like, I love this. I want to keep going, but I don't know how, right? So those stories over 20-something years are I got a bunch of them, but that's the most recent. So
yeah, I love that. I think it's so important for people to have resources in their life. We often talk about building yourself a team. When you are an investor or you're just a regular buyer, it's important for you to have a team. It's important for you to have a real estate agent, an investor-friendly real estate agent. It's important to have a lender that is actually invested in real estate. Like, I've invested in real estate, you invest in real estate, Hampton's the quintessential investor. Yeah. And so you must have a team. And I think it's important for you to be part of that team, for us to be part of that team when it all comes down to it. And so, Hampton?
Yeah, you're kind of running a business, but running a business can be hard, but it doesn't have to be. That's why we want to give a shout out to Bespoke Marketing. So our friends there, they can help you look great at what you do best. Bespoke Marketing, connections tailor made. And back to lending, back to
You're right.
fun stuff. So
Yeah.
it's interesting to hear you got somebody start off with 4 properties. You know, they're starting a plan, they're refinancing, they're pulling out equity, and I'm fast forwarding to 5 years from now. I bet if we sat down, 5 years from now, that gentleman, may have, I'm guessing, 5 times as many properties by then.
I hope so. Yeah.
Because with the right guidance, with the access to the capital, if he keeps his credit, clean and still can find good deals on properties, the sky's the limit. And with the right team, you can acquire those. Go from 4 properties to 20, or 4 properties to 40.
Yeah.
Depends on what your appetite is, what the plan is. But that's in real estate's so many different ways to make money and build wealth. And
That's right.
it's pretty darn amazing and rewarding.
It is.
And so I was curious about, there are so many loan options out there, and what's a common myth or misunderstanding, Garry, that you hear all the time from both investors and just traditional buyers, but really just kind of investors? What are some of the misunderstandings that people that come out there?
Okay. I'll touch quickly on a few. The traditional buyers is real easy. There's lots of common misnomers for a traditional buyer.
Yeah.
I have to be in my job for 2 years. No, you have to have a 2-year job history. You can be on your job for 2 weeks, right? I have to have a down payment. No, again, traditional buyer, you don't. Plenty of no down payment options. Have to have perfect credit. No. No down payment options as low as a 620 credit score. If you have down payment, you can go down in the high 500s, right? So that's a quick touch on your primary buyers. But your investors, there's some misconceptions as well. I hear a lot of times, this is a big one, over 20 years. I don't have my 10 Fannie Mae's yet, so I should be able to do 10. And I ask them, I said, well, how many properties do you have loans on? Oh, 40. Yeah, no, you can't do any Fannie Mae's. Oh my gosh, I don't have 10. You could, to do financing, conventional financing with Fannie Mae, you can't have more than 10 properties financed.
Right.
Right?
Right.
So if you have 4 properties with equity lines on them, 4 properties with bank notes on them, and 3 properties that you had previously with a conventional loan, you have 11 properties financed. It doesn't matter what type of financing, right? So you're now outside of the scope of Fannie Mae, right? It's the number of properties that you have loans tied to, regardless of what type of.
But someone in that situation, you may be able to work with them and consolidate if they had a lot of equity in a couple of them.
Yeah.
Say, hey, let's wipe out a couple of those loans. Let's consolidate into one, and now they go from 11 down to 7 or 8.
Even better, took a guy from 15 to 10 several years ago, and he had all these different type of loans and other. Just get him referred to somebody that cares about your business and that understands the investor side and the lending side. And he said, what's the best thing I can do with this? And so after we looked at it, I said, let's take your 10 best properties, being the most valuable. Let's cash out, refinance all 10 to the maximum loan to value, which is 75% on a cash out. And we'll pay off the other 5. Now you have 5 properties free and clear. You have options now, okay? You can have this amazing cash flow on all these 5 properties, or you can take those 5 properties to the bank and get a bank note to get all this cash out to go buy more properties, but we have secured your 10, 30-year fixed loans. Does that make sense? So we've really helped him on the first big bulk of his financing.
See, and I love that because you have now transferred from, hey, we've helped you with financing, to now you are on your wealth building journey.
That's right.
Right? Because now that 5 properties are paid off, that cash flow went up several percentage points every month. And so as you are younger, you're encouraged to start off with, hey, appreciation. When you're buying, get the appreciation going on. When you become old like me, then you're thinking of perhaps some cash flow. Mm-hmm. And everyone has different types of perspectives when it comes to that, but being able to handle both sides of that is super important. And I meet people all the time that I work with that are getting to that level of, okay, I built up enough doors. Now it's time to consider how to increase that cash flow off of these properties over time.
Yeah.
And I think that's an excellent way to go ahead and do that.
Sure.
Is there any, I hate to say or be negative, but when working with any investors, or if investors are looking for lenders, are there any big, red flags, could pull this out for Bill here. He hides back there. Any red flags that you're on the lookout for, or types of properties that are real tough for investors to loan on?
Yeah.
Not you like that. I was looking for the
property types. That's a great question. No property type is really out of the question, but there are more challenging ones. For example, right now I'm doing a DSCR loan for someone with an octagon-shaped house. Okay, you may think, I got a really great deal on this house. It's in perfect shape. It's 3 bedrooms, 2 baths. This one's a VRBO on the lake. It's a beautiful kitchen, and it is a good property, right? But we have in-house DSCR. We're a lender. We lend our own money. Supreme Lending did about $6 billion in home loans last year, licensed in every state. So I don't say that to brag, but give you the scope of the company. We're not a broker. We're a lender. But in the rare instances that we don't have a product, we can broker it. So we have 10 in-house DSCR programs. Not one of them would touch that property. So then I went to the 25 brokers that we broker with. I found one. And we're in the middle of it, and I've got my fingers crossed, fingers crossed, hoping we're dead in the middle of it. And so you see that we'll probably get that done. But that property type is tough. Berm homes are tough. Not out of the question, but they're tough. Log homes are tough. Not out of the question, but they're tough. All of these unique properties, let's say you have a 2-story home and your kitchen's on the 2nd floor. Well, that's unique, right? So any type of really unique situations that you find, not always the only solution, but the primary solution is you have to find comps, and that's tough. That's the big reason, right? It's a unique property. So is that a pretty good answer to your question?
That is a pretty good answer. So
yeah. And so quick question before our break here is that if you're a first-time investor, came to you for advice and to get their financing in order, where would you tell them to start?
Well, I would start by saying I'd have a consultation with them, because I kind of view myself as, and sorry, I'm not licensed financial advisor, but I view myself as a financial advisor, not with your stocks, bonds, mutual funds, things like that. But as far as looking at your whole picture, right? So I'd start by that person having a consultation with them, because I've been them, right? And I have concern for them doing it the right way. If you do it the wrong way, you can end up in bankruptcy court real quick, right?
Yep.
So I want to find out what their overall picture looks like. I want to get their credit. I want to see how much assets they have, checking, savings, stocks, bonds, mutual funds, et cetera. We'll see if they have a house, what kind of equity they have. Check and see if they've got, credit cards and student loans and personal loans and things. And so, quite honestly, I may be able to approve that person with all that. And I tell them that. I don't shy away from doing a mortgage loan, right? I'm obligated not to. So I'll tell them, I can approve you. You've got, I say, 20% down to buy this rental house, and I can approve you for it. Let's go. Let's do it. But man, if I were you, I really would get rid of that credit card debt first. I'd get rid of those personal loans first. If you want me to advise you like I would my brother or my son,
right.
I start by saying your goal should be to have only appreciating or income producing assets. And your camper is not one.
Yeah. The car you just bought usually going down.
Your Beamer's not one. The worst case, even like what I've recently told my oldest son, is like, listen, a kid, he's starting to be an investor. I never push my kids. I just advise him to do things, but he's starting into it. He's got a second house, and he said, "What do you think I need to do with my finances?" And I said, "You've done a good job. You've paid off your credit cards. You've paid off your down payment assistance loan on your first house that you bought. Now," I said, "it's not at your age. I'm okay with it, but at some point, you're going to want to get rid of the car loan." Now, that's just my advice. Some people don't care, right? I said, I don't think it's the end of the world if you have a mortgage on your primary, cash flowing mortgages on all your rentals, and a car loan, right?
Yeah.
That's not the end of the world. It's okay. That's a fixed debt. It's not terrible, right? But definitely, again, a long way to answer your question, but get rid of all that other debt, maybe a car loan, and have the goal to get rid of that, where then you go to only have, again, appreciating or income producing assets. Get as much of that as you want, whether that's $10,000 a month in rents or $1 million a month in rents. And when you get there, start trying to pay that down.
Yeah.
And that's great. So excuse us, Garry.
And when you do get there, if you're like, like me or other investors, you've got rental properties that are constant state of revival. And I've used this company recently. They're a big sponsor and friend of the podcast. Benthall Brothers. They're family owned. They do siding. We use them for windows, garage doors, premium exterior products. You can look them up and find them at benthallbros.com. And for all your exterior and home siding needs. And I know a few things, or remember a few things, because we went to high school together.
Yeah.
And
I won't say everything.
I won't say everything. We had mutual friends and things, and I found out, and friends of the podcast will know about Milton. He was actually in a dance troupe, dance gang, posse. I'm not sure what it was. He had nicknames and everything. Were you part of any little club? Maybe you and some other football players that involved your jersey numbers? Because I remember this. I don't know if you'll talk about that at all. That's why we're having
I know exactly what you're talking about. The low 50 boys.
The low 50 boys.
Gene Sparks, John Stemmerman, Tim Bone, Matt Meehan, Gary Settle.
Yep.
Absolutely.
Yep. John Stemmerman.
We all, goofy high school stuff.
You had your number, gold numbers,
we all had a little chain with our number. We all made a logo. We put it on the back window of our cars. We got T-shirts. We were super proud of our made-up club, but it was fun. I still remember all the guys. I still talk to most of them.
We need to tag them in Facebook, and they see what you're up to. And gosh, you guys were big. Big. I just remember the combined weight of those guys.
Yeah, it's a tough group.
Yeah, some big boys. But those were the days.
Yeah,
so
it's fun. It was a lot of fun. It's fun to look back and when you did not really have all the inhibitions and things that you have as a grown up and trying to protect your image. You just did fun stuff, so it was a good time.
And so, as, because you've been in the game for a long time. And if you look back over your career, what is the biggest shift or change that you've seen in lending? And how can borrowers prepare for any market? A lot of investors we're always looking for money. And we're always looking for deals. We're always looking for money. What are some of the shifts you've seen looking back over your?
Oh my gosh, I've seen a bunch of them. I mean, first you go back to 07 and 08 when we had the what do they call it, the Great Recession, and then Dodd-Frank reform and all that stuff.
Right.
Involved in that, and we all thought, oh my gosh, this is the end of the world, right? And all these reforms, the mortgage lending, we're not going to be able to do business. This is too restrictive. They've got their hands around my throat, right?
Right.
And all the property values tanked, and we thought we're never going to recover. And you fast forward, and not too long after, I mean, in my brain, because I'm old, values were higher than they were before the tank.
Right.
Yeah. Lending levels were higher than they had ever been. Right. And then you go on and you get through COVID, and oh my gosh, the world's going to end again. Like to say, we're going to end again. Nobody's going to do business. When that pandemic first started happening, us lenders and people that are commission only, self-employed, thought, man, I'm going to have to deliver pizzas. This is going to be terrible. And it was the biggest boom we ever had. People were at home and they didn't have anything to do but call about buying houses and refinancing houses. So,
and I did that during the dark times. Yeah. I mean, I had to get out there and do something.
Yeah. And the world didn't end, right?
It didn't end.
and then we go through a couple of things that you guys that are realtors, the reform that happened to you guys, right? And I'm sure a lot of you guys thought, oh man, this is the end of the world, the end of my business, end of the buyer's realtor. It's not. Everybody just reformed, started changing the way they talk to people. Everything's fine. And then now, this 3-year tank we're in the rates and all this stuff, and that's been a challenge, right? That's worse than the 08. Why it's worse than the 08 is the 08 one turned off like that and then turned on like that, right? And it was a period that wasn't too long. It seemed long, right? But this is a 3-year drag, right? But all those things and all the things that are to come, what I would tell realtors, investors, loan officers, anybody in this type of business, the world's still not going to end. It's going to be okay. Stick to your principles on how you do business. If you're an investor, stick to your principles on the amount of equity and cash flow and how you do things. It's all relative to whatever market you're in, right? Stick to your principles and be ready to adapt and change and shift and pivot. And so that sounds like I'm a little bit talking about both sides of my head, right? Stick to your core principles, but also be ready to say, well, there may be a new way that I have to do business. Social media and things like I ain't have Facebook till 6 years ago, right? And if you see me now, like I'm doing videos and all this stuff that is madly uncomfortable for me. So, but until 6 years ago, I'm a guerrilla marketer, man. I go knock door to door, meet people and shake hands, and that's how I do it. And that's why I say stick to your principles. I still do that.
And do you still have the barbecue truck?
I do.
Or the tailgating? What is it the name for it?
Thanks for mentioning that. We call it the tailgater. We went and bought several years ago an enclosed trailer. We logoed it up so it would look cool. And we have in it like 35 chairs, 3 giant tents. We have a grill. We have a sound system. We have mats and tables. And it's kind of a party in a box. So for realtors and clients, people want to do an employee appreciation. People want to do whatever. The pitch to them and the draw to them is we'll show up, we'll unpack it, we'll cook, we'll have all the drinks and beverages and the music and everything. The big time gets done, we'll pack it up and leave. Doesn't cost you anything. Doesn't take up much space, and you don't have anything to do but have a good time. So,
well, we may need to talk to you because you found the new space, and we thought we would cook out or do a parking lot party, invite our neighbors over. There's closing companies nearby. Yeah. There's several realty companies. You'd have your tailgater with the Supreme Lending right there on a fairly busy road.
What it's for is just collecting dust in the garage.
And we can have and you had me at party.
Excuse to barbecue.
Right? Yeah. It's an excuse to, have a good time and we can have a party. Yeah. And, so I totally love that. So I got a sense that you feel like you changed lives.
I hope so. I hope so. One of our company mantras is to enrich lives. Mm. And that literally, you'll see that all over our website and everything, is to enrich lives and put people in homes. There's more to it, but I'm paraphrasing. Those are the two main things that we do. And then I like, yes, and I absolutely, that if I can make a decent living and provide for my family, build wealth personally, and at the same time enrich lives, man, what's better than that?
Wow. That's absolutely amazing. Hampton?
It's a rewarding business. So it's enriching lives, put people in homes. Realtors can do that. Investors, we do that, whether we're renting homes and fix them up and then somebody's buying them to live in and raise their family in. But how we want people to, how can they reach you? Once you give your promo shot, basically give us the commercial, how they reach you, what you do, website, everything.
Hey there, I'm Garry Settle with Supreme Lending. With 20 plus years in the banking and financing industry, I'm here to help you accomplish your dreams with respect to buying a home, a primary residence, a vacation home, or an investment property. You can come to me with confidence and know that I can find the best thing to fit your needs. So, how do you connect? Call me. My cell phone number is 502-298-1356. Also text that number, 502-298-1356. Monday through Sunday. Let me help you accomplish your goals and your dreams.
Well, Garry, we want to thank you so much for coming out today. You are a member of the tribe. Okay. Man, you're in the tribe. And will you come back and hang out with us?
Yeah, anytime.
And so we're going to have to do this again. And we thank you so much for hanging out. We learned a lot today, man.
We did.
We also learned with the money and the party. And we know where the money and the party is.
I said you can invite him to the barbecue, but he's bringing the barbecue.
No. Is he bringing the money?
Oh, he does for investors.
He can bring the money. Yeah, he can bring the money and the party.
Yeah,
come on. What's better than that, right? And at the Investor Tribe, we're going to help facilitate that.
Yes,
for you. And I'm Milton.
And I'm Hampton Scurlock.
And we'll catch you on the flip side of the Investor Tribe.
The Investor Tribe podcast is brought to you by the Investor Tribe, all rights reserved, featuring Hampton Scurlock and Milton Aldi, executive producer Drew Cookenmaster, produced and distributed